Like the rest of the research flow, the DCF valuation page starts from the previous page, which in this case is the technical analysis page. Here's the path I'd recommend. On the technical analysis page, click the Financial Summary button. Scroll to the bottom of that panel and click Open DCF Valuation with these inputs. That carries the company's actual growth rate, estimated WACC, and free cash flow, pulled straight from its SEC filings, right into this page. When you arrive that way, you'll see a green banner confirming the inputs were pre-filled from actual financial data, and the key fields are already populated for you. That's the whole point. You're starting from the company's real numbers instead of generic assumptions. Once a ticker is loaded, you'll see the AI-suggested parameters panel. At the top is the company name, its sector, and its size category. Below that is a grid labeled From SEC Filings: revenue, net income, free cash flow, margins, year-over-year growth, and key ratios like PE, EV to EBITDA, and D to E. This is the actual trailing 12-month data the suggestions are built on. If a company doesn't file with the SEC, a foreign listing, an OTC name, or a pre-revenue company, you'll see a note that the platform is falling back to sector-based defaults instead. That's your signal to treat the output with more caution. Below that is the growth profile. These charts show what the company has actually done over recent quarters: revenue, gross margin, earnings, and free cash flow trends, along with a Rule of 40 score. I'm not going to break these down here, but the purpose is simple. Before you trust a growth assumption, look at whether the company's real track record supports it. Now, scroll down to the parameter inputs. This is where I want you to pay attention to the small badges next to each field, because they tell you where the number came from. A green From SEC Filings or actual TTM badge means that value is grounded in the company's real financials. A sector default badge means it's a reasonable assumption for the industry, not company-specific. And an orange estimated badge means the platform had to approximate it, usually because filings weren't available. Growth rate, terminal growth, discount rate, and projection years are all editable, so you can adjust them to test your own assumptions. Current FCF and shares outstanding are read-only. Those come directly from the filings and anchor the whole calculation. Each field also has a short note explaining the reasoning behind the suggested value. If you want to go deeper, read our blog, What is DCF Intrinsic Value and Why Does It Matter?, to get a complete explanation of what DCF is and how it works. When you're ready, click Calculate DCF Valuation. At the top of the results, you'll see the company name and a row of action buttons: Add to Watch List, jump back to Stock Details or Technical Analysis, and 2 I'll come back to in a second. Below that are the 3 numbers that matter most: the current price, the DCF intrinsic value, and the margin of safety between them. If the intrinsic value is above the current price, the stock may be undervalued, and the margin of safety tells you by how much. Under that is the recommendation, anywhere from strong buy to strong sell, with a short explanation of how that rating was reached. Next is the FMP Benchmark comparison. This lines your valuation up against an independent DCF model from a third-party provider, so you're not relying on a single calculation. If your number and theirs are close, that's reassuring. If they're far apart, that's worth understanding before you act. One important note: if the valuation had to rely on estimated data instead of real filings, a low confidence warning appears here. Take it seriously. It means the output is a rough directional read, not a precise number. At the bottom is the projected cash flows table. Each year's projected free cash flow, its discount factor, and its present value, adding up through the terminal value to the enterprise value. This is the full math behind the intrinsic value, laid out so you can see exactly how it was built. Now, those 2 buttons I skipped, Cross-Check with Relative Valuation, takes you to a second valuation method on the other tab at the top of the page that values the company against its peers using market multiples. A DCF and a peer multiple approach coming out in the same range is a strong signal, and a big gap between them is worth examining. I'll cover that method in depth in a separate video. The other button, Trade This, is on our active and professional tiers. It suggests an option strategy based on the gap between the price and your DCF target. One thing to keep in mind, and the platform says this too, a DCF intrinsic value is a multi-year estimate, not a near-term price target. So any short-dated trade is sized to the expected move, not the full DCF number. Last thing, one quick caution. If the ticker you enter is a warrant rather than common stock, a warning box appears at the top. DCF isn't the right tool for warrants, so the box points you to the underlying common stock to analyze instead. That's the DCF valuation page. It takes the company's real financials, builds a transparent valuation you can adjust and pressure test, and cross-checks it against both an independent model and a peer-based method. I hope this video was helpful.